Really interesting to see how investors are trying to detangle the tariff story, how they're trying to pick the winners and losers in this, away from the rights and the wrongs of what's happening on trade and tariffs and the future of globalization. What kind of conversations are you having with investors? I've got this chart, which is 6647, which highlights underperformance in metals and miners over the last week and a little bit of underperformance from European autos as well. How do you see this playing out into the future?
Yeah, I mean, this is a fascinating theme because you have to think about the first-order impact and then the second-order impact. So the first-order impact would be essentially the metals and mining stocks and companies that are directly impacted by the imports and the tariffs. But what's more interesting is the second-order impact of a trade war domino effect. So if you think about domino effects, it's the question about the European Union retaliating as well, or China trying to essentially put more tariff as well. But the problem is this is a lose-lose situation because ultimately there's no winners, but there's also a case to be made that the US presumably could be the last man standing, so to speak, because there's obviously $20 trillion in GDP, so they are effectively bigger than the other regions. Is
there really no winner in the I understand what you mean about the effects on globalization, and therefore it's been described by many people as lose-lose. But if you look at the way that markets have reacted when you see Trump talking tough and then you see countries lining up to get exemptions from steel and aluminium tariffs, are there some investors talking to you about ways to play the US stocks that benefit?
Well, yes, we are at Societe Generale. We're essentially constructing thematic baskets where you can essentially go long stocks that would benefit and short stocks that would essentially lose out. And this is already playing out in terms of price action. So you have some of the autos who will be losers in the EU, for example. In the US, you have sort of domestic producers who obviously will get more market share. So this is already playing out. But as markets are able to discount a lot of these news very quickly, the pricing adjustment have already occurred to some extent. So what's more interesting is essentially the domino effect and what's next, so to speak.
Yeah.
But what's interesting to finish on this topic is that Trump has given the opportunity to countries to argue against and be taken out of the tariff, which ultimately creates a sort of uncertainty with respect to how significant it will ultimately impact the earnings of these companies.
OK, Matt, jump in.
Well, I just wonder if it makes any sense to you that this could just be negotiating tactics from Donald Trump, Koku, because clearly he's said, you know, we're going to put tariffs, slap tariffs on you, and then Mexico and Canada complain, and he says, all right, well, maybe not if you sign a NAFTA deal that we want. It seems like he does this again and again with Kim Jong-un as well. The previous comments that he made, and now he's going to go and meet with him. It seems like a pattern in Donald Trump's behavior. Is he just negotiating, playing hardball, as I'm sure he would like to call it, in order to get the U.S. a better deal?
Absolutely. And then if you listen to what he says, this is ultimately one of the key points with respect to the EU, for example, because he argued the EU also has a tariff, and if they want to negotiate or essentially have the US drop their tariff, they should also do the same thing on their side. And obviously there's the midterm elections, and a lot of people can think of this whole as a negotiation tactic. But the problem is these obviously has consequences, and with Gary Cohn having resigned, the likelihood of this having more teeth than just being a negotiation tactic is what investors are worried about, hence the price action that you've seen so far. So ultimately, this just brings more uncertainty. It's very difficult to see what the end game would be. But the last interesting thought is that the other countries are not going right away into just putting more tariffs. They're essentially trying not to escalate an outcome or a situation that would be damaging for the world economy.
It would be silly to expect that without Donald Trump, we would have free tariff-free trade around the world. I mean, clearly there are already tariffs on so many goods in so many countries, coming in and out of so many countries. If you look at ECTR on the Bloomberg, Koku, you can see the trade deficit that the U.S. has with various countries. And this isn't necessarily a negative thing. I'm just pointing out we have a 327 billion trade deficit with China, $100 billion trade deficit with Mexico, $66 billion trade deficit with Germany. And by the way, Germany has massive trade surpluses with almost every country in the world. Is it possible that the U.S. in the past decade or decades has just generally gotten the short end of the stick when it comes to international trade?
Well, I think we're only looking at part of the story. You have to realize one key point is that the U.S. is the largest economy in the world with $20 trillion in GDP, and 2/3 of that is consumer spending. So the U.S. consumer ultimately spends twice as much as the Indian and the Chinese consumer combined. So this is part of the world order in which we have been for the past few decades. And the other important point is that the U.S. also outsources a lot of its production capacity to China and other countries. So the companies globally are part of a global platform with an international and global supply chain process. So trade deficits are just not goods coming from other countries. They can be semi-finished goods that are also used by U.S. companies onshore. So I think the question is, if you're going to change the world order and the way companies supply themselves, I think this ultimately will have repercussions as well.